Well, to talk about the quarterly performance, the year gone by and the year ahead, and not just the year ahead, perhaps the decade ahead, it gives me great pleasure now to bring on board Mr. Anish Shah, CEO and Managing Director of Mahindra & Mahindra, to get into a free-flowing conversation about margins, markets, M&M, IPL, and life, right? Lots to cover, I guess. So nice to have you in studio.
Sounds good, Nikunj. It's a pleasure to be here with you in the studio. And good morning to everyone.
Shareholders are happy, management is happy, stock at an all-time high, profits at an all-time high. What you promised when you took over, you've delivered on all count. I'm sure that must be a great feeling.
That is a great feeling, and I would give a lot of credit to all our teams. They worked extremely hard. Across our businesses, we are seeing a very high level of performance, and that is credit to every single member of the team.
Your numbers are looking strong, demand is strong. How much would you say is largely because of the internal changes which you've done at return on equity level, at return on capital level, in terms of operational efficiencies kicking in? That's what management can do. The second lever is the natural tailwind of demand and what is happening in the automobile market. What has helped you more, the natural tailwind of demand or internal measures?
I'd say that the internal measures have had a much bigger role to play because, as we've seen, overall the auto industry is not growing at a very rapid pace, and we've been far outpacing. But it's not just auto. Our performance is driven by a large number of companies besides auto. Farm has shown a resilient performance in a tough industry. Mahindra Finance actually has turned around very well and is on a very strong path. Tech Mahindra is starting its turnaround right now, and our growth gems, they've done an amazing job in terms of creating value, in terms of setting themselves up for multiples of growth. So it's an all-round performance across all our companies. And what's helped is, to start with, when we had focus on capital allocation, we could exit businesses that didn't make sense, and that enabled a sharper focus on where we play today. And beyond that, we really focused on collaboration, agility, on being bold, and that is what has helped us deliver these results. And as you rightly said, our important focus was, let's deliver what we promise.
Okay. The minute I say Mahindra & Mahindra, the first impression earlier used to be autos, but that is changing now. What is interesting here is that at a consolidated level, you have a ROS of about 18%. Given that businesses are turning around and businesses are in the process of turning around, whether it is Growth Gems or Tech Mahindra or Mahindra Financials, can 18% ROS, can it move towards 20 now?
So we have maintained 18%. When we said it the first time, everyone said there's no way you're going to get there. We got there in 18 months. And we still say 18% because we want to drive growth. And we've been doing that in many of our businesses. So at this point in time, it's a balance between growth and the ROE that we show.
Again, I'll take the clock back, then we'll take the clock forward. If I take the clock back, the real massive success story for Mahindra & Mahindra has been how they have really emerged as the market leader in the SUV space. The big turnaround which has happened in Mahindra & Mahindra Finance, the big change which has happened in some of your growth gems. But that is last 3 years of hard work. How will the next 3 years look like?
The next 3 years will be continued success for the auto business. It's positioned very well right now. We've got multiple products over the last 3 to 4 years that have been huge successes. And it's really the DNA of the company that's showing in terms of its success. The farm business is very well positioned, and we would look for more growth in international, more growth in farm machinery. And our growth gems, as well as Tech Mahindra and Mahindra Finance, these all will perform at a very high level. The one thing I do want to highlight, Nikunj, based on the earlier question as well, is that what we call services, which is everything outside auto and farm, actually generated more cash than either auto or farm in the last 3 years. So this is essentially a testament to the fact that all our other businesses are performing very well in addition to auto and farm.
How much would be a profit split between non-auto and auto at the group level, at the consolidated level?
So typically it is about 25% auto, about 25% or 30% farm, depending on which year. Sometimes auto is higher, sometimes farm is higher, and then the balance is services. So certain factors in every year will impact it, but that's a typical split.
Do you see that number which is a combination of tractor and autos, which stands at 50, could that become 40 as other businesses they grow? Could that number keep changing? Because if that other business is growing, that's the high return on equity business for you.
We would like all of them to grow and the pie to be bigger overall. But yes, that is possible because other businesses are very well positioned and we are driving a 5x growth in our growth gems. So as we do that, we expect them to grow at a much faster pace than our larger businesses.
You've exited a lot of non-core businesses, a lot of tough decisions were taken, even let's say at a group investment level and even at a group company level. Have all the tough decisions been taken in aligning the non-core businesses now?
Yes, we completed all the tough decisions literally in the first 18 months or so of my tenure because we want to get that behind us. And we exited 15 businesses, which is not an easy task, but that was important. And that is really what set us up for the growth phase after that.
You have registered a growth of 25% at a consolidated level. But the choice of words when I asked you this question was that you want to drive growth further. So what is that internal number? If 25% is not making you happy, what will make you happy?
So if you look back at the last 4 years, the EPS growth on a compounded annual basis is 84%.
Okay.
That is not the target we are setting, and we made it very clear to analysts yesterday. But our target is 15 to 20% EPS growth on a consistent basis, and we continue to strive to outperform.
Tractors is where the gray area is. And the general assumption, let's say 2 quarters ago, including by analysts and by media, was that there is a pain in the rural economy. But data points are changing. I look at sales which are coming from the two-wheeler sector. It's impressive. Most of the FMCG companies have given a very decent and encouraging guidance for the second half of this year in terms of volume growth. But you are maintaining your growth in the tractor business at 5%. Are you being cautious?
So we've been asked that question every year. And typically every year the market has been more or less what we had projected at the start of the year. That doesn't mean that will be the case this year. We hope it will do better than what we project. But based on what we see right now, we think that's a reasonable number to have. And if we do better than that, then we are in position to benefit from it.
Your 5% growth assumption which you've guided for the tractor business, I'm sure there would be an assumption in and around monsoon. So what are assumptions for monsoon? Because a good monsoon definitely will take the number higher.
So our assumption is a reasonable monsoon. Okay. Somewhere between good and bad.
But do monsoons play a large role in tractor sales, or that's passé now?
They play some role. They used to play a much bigger role in the past. It's less at this point. I think it's overall farm income, terms of trade for the farmer. Those are factors that play a bigger role at this point.
I'll shift gears literally in this case and talk about the auto business. That's where the real success story for Mahindra & Mahindra has been. You have a dominant market share there. You've surprised the markets and you've delighted the customers. But some would argue that competition also has understood your playbook. Launches are increasing, competition is increasing, variety is increasing. And that could lead to pricing pressure, and which means that best of the gains for Mahindra & Mahindra in the SUV space could be behind us.
For us, it's not about launches or variety. It's about quality of the vehicle. And that has been a single-minded focus. At one point, we were a very strong value player, where we would offer a very good price and a large number of features. 5 years ago, we changed that. We said we want to be by far the best vehicle in any segment. And in fact, it should compete with the segment above it and actually do better there as well. And that's what we've done. As you look at the Thar, the XUV700, the Scorpio N, the 3XO now, these are all vehicles that are just outstanding vehicles. And that is a much better place to compete from.
So what, let's say, Scorpio did for you, or what XUV500 did for you in 2021 and 2002, can XUV300 do the same to you in terms of giving you that fillip?
It's a combination of all of our vehicles right now. It's not just the 3XO. And Scorpio continues to be very strong right now. Bolero continues to be very strong right now. The XUV500 has morphed to the 700 now. So these are vehicles that we've built over time. And therefore, I go back to our DNA. We've been able to build very strong brands over time that have really stood out for decades. And that's unusual in the auto industry.
If one really looks at the SUV market, you've been a disruptor at every price point. First in the 20 lakh category, then in the 15 lakh category, now in the sub 10 lakh category. what is the next disruption which we should expect from Mahindra and Mahindra now?
Wait and watch.
But there's something coming.
The Thar 5-door is coming, which is known. And then beyond that, it's the born electric vehicles that we are looking forward to. And we think they've just come out really well and would be a great value proposition for the consumer.
Are you late in the EV race, or was that a conscious strategy?
For us, it's important to have outstanding vehicles when we launch. And which is why we took the time to make sure that we have a born electric platform and that we've got designs that consumers are going to look at and say, wow, I love that design. We've got the technology, the features in the car. So all of that is important. And if that takes a little longer, that's fine. But more critical is the quality of the vehicle.
But do you have big ambitions in the EV space?
We have big ambitions in the EV space, not just in India, but to make in India for the world.
I'd like to draw everyone's attention to two interesting deals which you did, one by one, which is that where you were able to value the EV business with a third party, or in this case, a foreign JV partner. Would you be open to doing such deals in other group companies also?
So EV made a lot of sense because the expertise that we can get globally will help our businesses. And which is why we were open to getting partners, and they've added a lot of value in terms of what they bring. And in other businesses, in growth gems in particular, we again look for global partners where we can get their insights and their guidance to be able to grow the business faster. In our farm business and Mahindra Finance and TechM, they're operating very well. They've got strong organic growth. So we don't see the need for other partners there.
When we spoke to you last on the same forum exactly a year ago, you said that, look, the growth gems are getting ready. And there would be a time when we would really start encashing the true value of them. In next 12 to 18 months, should we expect one of the growth gem going public?
Not in the next 12 to 18 months, but in many ways, we've seen one of our growth gems go public with the InvIT, which is a publicly listed entity now for Sustain. And Sustain has generated value already. So you go back to what I said earlier, our growth gems have generated 7,000 crores of cash over the last 3 years, which is more than what Auto did and more than what Farm did individually.
Well, a lot of management changes have happened at various group companies. I've had the pleasure of tracking Mahindra Group so closely that I'm aware of those management changes which have happened. Mahindra Holiday, big internal change. New leader at Mahindra, Tech Mahindra, leadership change on promise lines when it comes to Mahindra Finance. What is the messaging here? 3 big management changes in 12 to 18 months.
We've had many of our senior leaders retire, and that's part of the transition that we had planned for. Leaders who've done well to build the company, but at the same time, we've got a fresh set of leaders now who are going to take the company forward. So we've been lucky in the sense to have a strong foundation, and our new leaders are building on that foundation. So this is planned. This has been a very smooth transition across the group, and we have seen significant change because of the retirements, but the new leadership team has come in and is doing very well.
With the Mahindra, despite the Mahindra brand, some would say that Mahindra and Mahindra Finance has not really lived up to what it is capable of. There is a management change there. The rough past is behind us. Could it be new beginnings for Mahindra and Mahindra Finance? Is that company at that big turn, both cyclical and structural?
The company is positioned very well and has done, in my view, a remarkable job in the last 1.5 years. We are halfway through a turnaround right now. Factually, you're right. The company, in the past few years, has lagged its peers, and that's something that does concern us. And we put in a series of steps a year and a half ago. And if I were to just go through the specific things that were said, first was to reduce our gross NPAs, measured by GS3. That has come down from 16% in the peak time to 7 to 8% in normal times to 3.4% right now. We talked about getting under 4, and we've gone to 3.4. That has been done by cutting out certain segments that were more volatile. Despite that, assets under management have grown 24% last year, and we've crossed 1 lakh crore in terms of assets. More importantly, there's been a very strong focus on technology and data, and that's what's going to take time. A lot of work has been done, but there's still more work to be done. When we are completed, we want to be a company that has the best controls in financial services, a company that has the best technology, the best customer experience, and that will enable us to be able to grow at a much faster pace and be able to deliver to customers what they want.
Since you've crossed 1 lakh crore for Mahindra Finance in terms of the AUM size, are you aiming to take it to 2 lakh soon, 3 to 5 years?
I keep telling the company that slow down growth.
Okay.
Let's ensure that we've got very strong controls. Let's ensure we've got very strong stability in terms of our asset. But the potential for growth is extremely high. 24% for us is a slower growth number than what we could achieve. But it's the right balance for us to maintain as we focus on controls, as we focus on asset quality.
And is the message for Tech Mahindra completely opposite? Get growth back because they need growth.
It is get growth back, absolutely.
But at a time when the environment is challenging, we don't know which way AI is moving. The top 3 companies are struggling. Tech Mahindra is attempting to make a comeback when there is no tailwind, when there is a lot of hellwind. It would be a challenge and it would be a difficult trek, so to speak. Not impossible, but a tough trek, if I may use that word.
So that Nikunj, everything we've done has been a challenge and it's been a difficult trek. When I started at M&M, we had a huge mountain of challenges in front of us. We've encountered that, we've done well. Mahindra Finance has had similarly lots of challenges and they've done very well. So with Tech Mahindra as well, we expect that same trend to continue.
Since the 3-year vision has already been articulated by the management, so we know where things are moving. The rest to that is right now the situation is fluid. But you think that irrespective of the environment, Tech Mahindra would be able to deliver?
We believe that we've got a strong team there. There's a clear path that has been outlined. There's a very strong focus on delivery. So from a fundamental standpoint, we're doing everything that we can. And that has worked for us in other situations. And therefore, we feel confident that will work for us from a tech standpoint as well.
The big interesting change is Mahindra Holiday. Manoj moved up. And that is how any group always evolves, that you give chance and growth in different executive roles. It's an interesting business to be in. Are you feeling that the sector is really enjoying tailwind? Because when we look at other listed hotels and the tourism companies, they are saying that it's like boom time like never before.
You just have to look at occupancy rates today. They're very high. It's difficult to get hotel rooms. Prices are very high as well. And Mahindra Holidays is positioned very well because the feedback we get from our customers who go to our resorts is just outstanding. The experience that they have with the resorts is very good. And that's what we're looking at now and saying, how can we replicate that by tripling or quadrupling the size of the business, because the demand is there. And that's what Manoj and the new team will be focused on.
Let's address shareholders here, our viewers and your shareholders. Shareholders would say, look, there are 2 ways to look at a stock. One is EPS, second is PE. The EPS magic has happened. You've delivered. Cost efficiencies have kicked in, return ratios are improving. Now is the PE magic. Do you think as stability and as visibility comes back into the other group companies, the group companies could go through what could be called as a big PE change?
Our focus is to deliver, to set high goals and to be able to meet them on a consistent basis. I would leave it to the shareholders after that to decide what they would want to do from a price standpoint.
But in a boardroom, do market caps matter? I'm asking you a frank question.
I think it's more important to focus on delivery. Because market cap and pricing is out of our control. But what we also realize is that shareholders need the assurance that you're going to do what you say you're going to do. And they also need to see that we're being bold in terms of what we are saying. It's easy to say we're going to grow at 10% and be able to deliver that growth every single time. And that is consistency as well. But for us, it's a combination of taking bold targets and delivering on them. And that, over time, is what gets rewarded. So our focus is on delivery, on performance. And if we can do that over time, then we will get the rewards and our shareholders will get the rewards.
So I'll just summarize all the, the narrative of the conversation. I don't want to get this one wrong. Please correct me if my interpretation is wrong. First, let's start with the big picture. If I look at Mahindra Group, at various group companies, and our shareholders, our viewers would appreciate that Mahindra Group is actually a combination of group companies, and which is what we must appreciate. Auto is only 50%, baki aur se aata hai. I think that is something which needs to change, and I'm glad it is changing. As we look into the future for next 3 years, for all the group companies, you are excited and you see a lot of visibility.
We are very excited because we see all of our growth gems being very well positioned, and that's in addition to our large businesses will drive significant growth. A large business is also doing very well. So they're also looking at multiples of growth despite their size. And with auto firing on all cylinders, with tractors doing very well, Tech Mahindra starting its turnaround, Mahindra Finance on a very strong turnaround path, I think we are very well positioned today.
Auto, what is really been a magical patch for Mahindra and for the SUV segment? Do you think the magic will continue for next 3 years at least?
We think the magic will continue.
Okay. Tech Mahindra is on a cusp of turnaround. For Mahindra and Mahindra Financial, the turnaround has already started about 1.5 years ago. And for Mahindra Holiday, there is a natural tailwind which clearly is there, which the sector seems to be enjoying. Okay. I'll move to where you are investing now. Your Capex number is very impressive and it's a very large commitment which you are doing. How much of the Capex commitment at the group level will go into businesses which you are incubating right now, and they would be new businesses where you not invested in the past?
So right now what we've said is the auto business will get 27,000 crores. All of it will be self-funded by the auto business alone.
Okay.
And that is a reflection of the success we've seen, the path that we are on right now. And as you said, to create the magic, we need to create the products that consumers love. And that's what this Capex is in for. On the farm business, we would look at 5,000 crores of Capex. The farm business will generate a lot more than that over the next 3 years. These are 3-year numbers that I'm looking at, 25 to 27. And services, at this point, we've said 5,000 crores, which is what we can see in our current businesses. This does not include acquisitions. We would look for acquisitions that help us grow any of our businesses at a faster rate. And we will likely look for one new area to get into. We have been looking at that for a while, but it has to be an area where we can deliver returns that are outsized as compared to the industry. And if we feel we can do that, we will get into it. If we feel we cannot, we will not get into it. Our capital allocation discipline remains constant.
Okay. Manufacturing. Now, there is a consensus view that India is going through what could be called as its own renaissance in manufacturing. Auto is manufacturing. Solar panel is manufacturing. What else in manufacturing the Mahindra Group is open to exploring? Because some of your peer groups have moved from cars to semiconductor to electronic manufacturing. Are you also looking at really expanding your expertise in engineering and manufacturing?
So our first focus, Nikunj, is do less, but whatever we do very well.
Okay.
We may look at one more area, as I said earlier, but that would be done after very careful consideration, and that would be something that we feel is at scale and something that we can grow significantly. So at this point in time, our focus is deliver on what we have.
We had a conversation when you took over, and I said, Mr. Shah, this is 2021. Your promise was a return on equity of 18%, which is where you've delivered, a growth of 15 to 20%, but you've really demonstrated skill. Then EPS growth, which was in 20s, you've given an EPS growth of 84%. Now, that was a 2021 conversation. This is 2024. I'll use that magic capsule and go back and take this clock forward to 2028 or 29. What kind of conversation do you think we will be having when we are discussing Mahindra and Mahindra FY 27 or 28 numbers?
The conversation I'd like to have is that we've again delivered what we promised, that we've created products that consumers love, that all our businesses have grown multiple times and have created scale. We're making in India for the world, and overall we're making a much bigger impact for our shareholders.
And maybe a couple of companies which have gone public.
Yes, but that is in a sense less important for us overall. What we look at is our performance and can we do that well, and that itself will generate value for shareholders. And along the way, companies will go public, but from our standpoint, that's not the most important metric.
What is the risk to your forecast?
The risk for us today are really things that we don't know what's around us, and that's what we've seen over the last 2 or 3 years. So as a management team, we are geared up right now to be able to handle uncertainties that come in. In terms of what we know, we feel very comfortable, but often it's just not what you know, it's what you don't know that comes in and worries you. So that's what we have to be ready for.
Could it be talent? Could it be skilled labor? What about as you scale up? Because those are real challenges now.
From a talent standpoint, there is no worry at all. We've always had the ability to attract the best talent. We see even more of that given the performance over the last few years. And we've been able to attract talent from any company in the world. Beyond just attracting talent, we put in a lot of effort for talent development. We've got accelerator programs at different levels in the organization, many of them run by top universities around the world. And the focus that we have on developing talent on career paths will give us a very strong internal talent pipeline. And that's what we think will power the company going forward over the next few years.
When you look at your tenure, which is the current tenure at Mahindra & Mahindra, and as the CEO of Mahindra & Mahindra, which is one aspect where you think you have been surprised in a good manner? Where do you think you could have done a bit more? And where is that one area where you want to do more?
So what I have been very positively surprised at is the speed of execution that our teams have delivered.
Okay.
In many cases, we've said we will do this in a 3 to 5 year or a 5-year time frame, and we've delivered that much faster. The passion that's there across our teams is quite amazing, and that's palpable as you go and meet many of them. And that again is part of our DNA. We've always talked about purpose before profits. And as we look at a group that puts purpose before profits, this is the real outcome of that, where you've got teams that believe in what they want to do, that are very passionate, and therefore can deliver results. So that's what, in some ways I knew, but I've been surprised at the speed of execution that we've been able to deliver. The second aspect in terms of what we'd want, we need to do a lot more on the diversity front. We've taken actions on that. Diversity from a gender standpoint, international, LGBTQ, creating a very inclusive culture where it is completely open, everyone is of different backgrounds, and that's something the Mahindra Group can take a leadership role in. We've done a lot of work on gender diversity across corporate at Mahindra, which is a fairly large group. In the last year, as we looked at senior hires, 87% were women. Okay. And we're not setting targets. For us, it's clear. Every person will get a role because they deserve the role, because they've earned that role. And no one should ever feel that they're in a role because there was a target or a quota. But we're getting a lot of demand in a sense because we're creating an inclusive culture, and we're creating a culture that it makes it seamless in terms of anyone being there. And that's where we think we will be able to drive diversity in a much bigger way.
Since you've come to our studio this time, I can actually ask you a question that which is the new car you are using from the Mahindra stable? And next time if you come to a studio, which is the car you're likely to use?
So today I've come in the XUV 700.
Okay.
But I am waiting to get an allocation of the 3XO, which shall happen at some point.
CEO ko bhi nahi mila.
And consumers come first, as always. And then our electric cars as they come in.
Before we wrap, I just want to understand this from you purely, as a customer. They say that we always overestimate the rate of change in the short term, underestimate in the long term. Do you think markets are overestimating the rate of change in terms of energy transition in the automobile sector?
I think we are on a very good track to transition to EV. The question is timing. There will be hiccups along the way. Countries like Norway have gone to 90-95% EV already. There are countries that have seen certain hiccups because they've reached a certain point and the charging infrastructure hasn't quite caught up as yet. In India, we are at 1.5 to 2%. We have a long way to go. And we feel that it starts with products. As we create exciting products for the customer, that creates a demand, that creates a charging infrastructure around it. So I think we are well on the path to achieve that.
Well, so nice to have you on ET now, and you've really demonstrated that how grit, focus, and teamwork can really create magic. Thank you very much, and congratulations on this really splendid journey for Mahindra & Mahindra.
Thank you, Nikunj.
But that is back to story.
If you like this video, then like, share and subscribe to ET Now.